This is Guy M. Lerner, President of ARL Advisors and publisher of the Tactical Beta website. This is your chart of the week, brought to you by your online financial advisor, ARL Advisors. That's www.arladvisors.com. Everything you need to open an account with us can be found at arladvisors.com. This week's chart is a weekly chart of the yield on the 10-year Treasury, symbol $TNX.X. The red and black dots on the chart are key pivot points, which are the best areas of buying and selling. These are your areas of support and resistance. The red labeled price bars are positive divergence bars. Their presence represents downside slowing momentum. This is your 40-week moving average. This 4-year time frame shows how yields on the 10-year Treasury traveled within the confines of this very simple trend channel. Focusing on the price action over the past 6 months, we note that price fell out of the trend channel. Support was found at a yield of 1.539%. Yields moved lower through this level, suggesting that the trend would continue downward. However, this lasted only 2 short weeks, and as yields reversed decisively back through resistance at the 1.539% level. The positive divergence bar and close above resistance signaled a trend reversal. Prices consolidated for nearly 20 weeks before breaking above the following important areas, all in a single week. First, we had the 1.776 key pivot resistance level. Second, we had the resistance zone between 1.869 to 1.897%. And lastly, we had your 40-week moving average. Prices are now back within the trend channel. Old resistance becomes support. I believe this confirms the trend reversal. So what's next? The chart remains bullish as long as yields remain above the 1.869 to 1.897 support zone on a weekly closing basis. Yields on the 10-year Treasury could reach 2.475%. So what is the significance of higher yields? Over the past 4 years, periods of rising yields have been associated with risk on. Equities and commodities and in general risk assets should outperform. However, at some point, rising yields will become a headwind, especially in the absence of economic growth. Rising yield pressures are typically seen late in an economic cycle. Commodities such as crude oil should outperform paper assets such as equities. Gold tends to lag in rising interest rate environments. However, bull market dynamics still prevail for the precious metals until they don't. Final analysis, yields on the 10-year Treasury are headed to 2.475%. This has been your chart of the week brought to you by ARL Advisors. Please visit us on the web at arladvisors.com.